Hello, what's up, all of you beautiful subscribers? And yes, I am back from outer space. Don't turn around now. What a way to start off this returning episode. We're going to talk about the 3 outcomes of investing in cryptocurrency, of this investing craze in cryptocurrency. We're going to talk about potentially a Canadian recession hitting before the next global recession. So we'll talk about that, a little bit about Amazon and Tesla and Apple and a bunch of stuff on the docket today. We'll talk about also why I was away at the very end and my personal stuff. If you guys are interested in that, I'll just save that for the end. Don't want to bore you guys. Okay, let's talk about this cryptocurrency craze here. I was thinking about this on a walk recently, but so anyways, this title here just says, Ethereum price hits new high as billionaire predicts 25% surge in the next month. Okay, I don't want to talk about this article. As you guys know already, Ethereum just keeps hitting all-time highs. Same with Bitcoin. Same with the stock market as a whole. Same with essentially anything in investing. It's sitting near all-time highs. So I don't want to talk about that because I've talked about that way too much. I want to talk about the 3 outcomes of investing in this, okay? What's going to happen with this craze? There's kind of 3 outcomes on a macro scale that I see for cryptocurrency here. So number 1 is the one that I talked about a lot. About half of the most investors that I look at, or a little bit less than half, maybe 30 to 40%, think that cryptocurrency is in some sort of a bubble. Now, whether it's in a bubble that completely bursts and goes the way of the dinosaur, or if it's a bubble that bursts and goes down 50% overnight and just kind of stays at that level, who knows? But that's outcome number 1. It's a bubble. I don't want to talk about that. I've talked about that way too much. Number two is actually a likely scenario, is that crypto actually is going to turn into a commodity. It's going to turn into a commodity like gold or like silver or like oil, although oil's kind of in this weird state right now. Oil is known as a commodity. Like, you can buy oil for, whatever, $40, $45, whatever it is. And then, hopefully in the next few days, it'll go up or down. It'll go up, and then you sell it. And if you invest enough money, you make, good 5 to 10%. And if it's a lot of money, you make thousands of dollars, right? So, crypto could become one of those currencies. It's essentially an alternative common investing route, like gold, like silver, like oil. However, what separates it, it is kind of a commodity right now. People are choosing to invest in that over the stock market, over real estate, and they're making good returns, right? But what makes it kind of more of a normal commodity is if the price doesn't keep skyrocketing. That's usually not a good sign. Although the price of gold here, it's kind of skyrocketed from 2005 to 2011, the end of the recession, but nowhere near the same amount of cryptocurrency. But that's the other scenario. It kind of turns. Here's the thing with commodities is that, generally in the long run, they go up. Over the course of 30 years, they'll probably go up in the long run, right? Oil is kind of in a weird spot right now because renewable energy is kind of kicking oil's butt a little bit. But, things like gold and silver, they're fairly cyclical. Every single year, 2, 3 years, it'll go through some sort of cycle where it goes up and then down, and then it'll go up and then down and then up and then down, then up and then down. And so crypto could kind of turn into that eventually once this cryptocurrency craze comes to an end. Because how I see it is that there's no way that the government is going to let cryptocurrency become more of a I don't know, what's the word here? The main currency. Like in the United States here, there's no way the US government is going to let cryptocurrency overtake the American dollar as the most common currency. I just can't see that happening. The government, and for good reason, I think that the government should have some sort of control in currency regulation. A little bit. Now, the Federal Reserve. Now, I don't want to get into this macroeconomics here. I don't want to talk about that too much. I was going off the rails here. I was going to Federal Reserve and should we abolish that? No, right? But the option number 2 is that this turns into a commodity like gold or silver, and it goes through economic investing cycles. So usually, when people are worried the stock market's going to crash, you go and invest in gold. Gold goes up, so it kind of protects your investment against the crashing stock market. And when the stock market's going really well, gold goes down. And so maybe the same thing happens with cryptocurrency once this kind of reaches its peak. And third option is the option which I cannot see happening, but maybe in 100 years we'll see, is that the third option is that maybe Ethereum and Bitcoin turn into a utility. maybe they turn into a utility. So what do I mean by that? So one of the reasons why I think that Bitcoin is a bubble, and is in a little bit of a bubble here, is because people are investing in this a ton. Why? What is Bitcoin? What is Ethereum? Why are they investing in this? Think about it. It's because they think it's going to go up, because they think that other people are going to drive the price up because there's going to be more demand, and maybe they get a good return in the next few months and sell it off and make a few $1,000s. All right. What they're not betting on is that they're not betting on Bitcoin being accepted at your local convenience store. They're not betting that Bitcoin and Ethereum are going to be accepted at a sporting event. The actual application and utility of Bitcoin and Ethereum is not keeping up with the pace of the price. For example, Ethereum's gone up thousands of percentage points right this year. Has the utility of Ethereum gone up thousands of percent? I don't think so. Maybe 100%. It's not keeping up with that. And so, when you invest in a business, when you invest in a stock, you're investing in the business behind it. So if you buy Apple, you're betting that Apple's going to do well, Apple's going to grow their business, Apple's going to sell more iPhones, and it grows their business, and they share the profits with you, and you can sell it off, and that's usually what happens. But with Bitcoin and Ethereum, there's really, the business behind it is not that, it's not that big. The reason why they're so big is because people just want to invest in it. It's reminding me a little bit about tulips a little bit here, but saying that's why it could be in that commodity category, because when you buy gold, you're not buying a company. When you buy silver, you're not buying a company. You're just buying silver. And so when you invest in Bitcoin, you're just buying Bitcoin. There's nothing behind it. And so the third option of being a utility is what if Bitcoin and Ethereum grow to the point where they are accepted at the Walmarts, where they are accepted at the local shops, where they are accepted at sporting events. And eventually the application of that grows, and maybe they take someone takes a percentage of that. I don't even know who. The Ethereum guy's Canadian, right? The guy who invented Ethereum. I don't know who the Bitcoin guy is, though. I think it's some Asian. No, it's the Bitcoin. The guy who did Bitcoin is like mysterious and won't tell who he is, but apparently he's worth, whatever, $100 million, probably $1 billion now. So, but yeah, those are the three options. Three options are bubble. The second option is commodity, and the third option is utility. And so we're going to see what happens here. The third option means that it kind of turns into a little bit of a business. Second is commodity, and first is that it pops, and it's like tulips, investing in tulips from 1,000 years ago, or 500 years ago. If you don't know what what a bubble is, go look up tulips. The tulip bubble from whatever 1700s or whatever that was. Okay, we're going to move on here. Canadian households lead the world in terms of debt. Oh yeah, by the way, let me know what you guys think of the Ethereum and Bitcoin in the comments down below. I like hearing that stuff. So anyways, Canadian households lead the world in terms of debt from the OECD, which is the top 20 developed countries. And so this is something that I've noticed, man. I talked about this last year, about how the debt in Toronto specifically, Toronto, as you say in Canada, but Toronto, for all of you not born here, is that look, real estate prices going way up, credit card debt going way up. It's all at all-time highs. And for whatever reason, people aren't picking up on this. Now, it may not be a burst. There may not be a bubble bursting. However, if there's a recession coming for Canada, this could be the worst one we've ever experienced. In Canada, what people actually don't know is that when the 2008 recession hit, every other major developed country in the world had a recession except Canada. We did not experience this. We had one quarter where GDP was down like something percent, 0.4%. And that was just because the United States wasn't trading with us as much, because the United States GDP dropped off the face of the earth. But Canada, because we were so regulated, we were prepared for that. And so we technically haven't really, we had a little bit of a recession a couple years ago from oil, but we haven't had like that global we haven't had a big financial crisis or a big real estate crisis or a big, we just had an oil price crisis. And that's not really a real terrible nationwide recession. That was mainly in Alberta. So what I'm trying to say here is that, I mean, if there's a recession coming, and Canada could be the worst hit in the next one here. I mean, the debt ratio of, let's see here, emerging economies have average household debt levels of 40% as share of per capita GDP. Wow. And so advanced economies in red average under 80%. Canada's leads the world with 100% debt level per capita GDP. That is absolutely insane. 100%. What's that per capita GDP? Is it like $30-something thousand? I mean, I see this coming too. I was talking about the credit crisis here in Canada last year and how it's going up and up and up, and now this is like, I'm nervous a little bit. If the Canadian, I mean, I get paid in US dollars for the most part, apart from consulting stuff. So I'm kind of balanced in terms of how I get paid in currencies. I get paid, a little bit in Canadian, a little bit in United States, a little bit globally. So if the Canadian economy crashes and the dollar goes down, I mean, I'm going to be fine. I might get paid more, actually. I might be better off. But I'm just nervous for everyone else around me. What if the economy crashes? This is the worst ever. People can't pay their credit cards all of a sudden. All of a sudden, that goes under. Maybe the big credit card and banking institutions that issued those cards go down. Oh, wait a second. We all of a sudden now need to either bail out the banks, which are heavily regulated and essentially under government control, or we experience the worst collapse in the history of the economy. And so that's potentially, now saying that, is that going to happen? Statistically speaking, no. That is the worst case scenario. I think it's more likely that Canada, if there's a next recession bubble coming, an extra end of the economic cycle coming in 2018, Canada could be the worst hit, but it still might not be that bad. We'll see here. So anyways, what do you guys think of this? Oh yeah, but I wanted to talk about the real estate prices here in Canada too. I mean, I've been looking a lot, and rents aren't going up too much, so it's kind of this weird situation, but we're not going to talk about that. So what do you guys think? Canada's debt at an all-time high. We'll see what happens. Okay, let's move on to Amazon. Amazon faces Black Friday strike in Italy. Oh no, Italians are gonna be really mad that Amazon's not going to deliver on Black Friday. So, yeah, apparently the Italian workers, a few thousand of them, were told to mobilize for higher pay and a bonus to reflect the American e-commerce group's growth in the Eurozone's third largest economy. So what people don't realize is that this e-commerce part of Amazon isn't profitable. People don't know that. The physical shipping of the products and doing all this warehouse and all anything you buy online from them, they lose billions of dollars through this. Still, you know how they actually became profitable? It's not because of this. It's because of Amazon Web Services. And so workers here think that that's all the same thing. It's not. It's not. What you're essentially doing is you're kind of going on strike demanding higher pay for the branch of the company that's bankrupt. Now, I know it's all under the same. I know that Amazon's going to be fine. They could pay people a little bit more here, but they're just barely profitable. I know that. I'm not saying that too. I'm also on the worker side too. I mean, here I was doing the calculations here. Okay, so I was looking at Amazon worker wages here. So on average, the warehouse associate makes about $14 an hour. Okay, so $14.13 in $13.63. So we're gonna say $14 here per hour. Let's say you work there full time. You work there full time at the Amazon warehouse. How much money would you make for the entire year? Well, let's take a look. $29,000. If you work full time, which most of the people there don't, they work like 35 hours. You're gonna make about $29,000. $29,000. That is, I mean, the median personal income in the United States for a working citizen is $33,000, roughly $34,000, and that's not a lot. And this is $29,000. I almost made that like part time while I was in school. Not 29,000, but like it's kind of really shocking to think about that. And I won't say almost, like I don't know what the exact number was. It was somewhere between 10 and 20,000 while I was running my own stuff part-time in school. But 29,000, that's not a lot to live on, man. That's not a lot to live on. And I understand this. I mean, it's tough because Amazon's killing a lot of other businesses that might have paid more. But they're also it's just, I'm in this weird spot here where like I really don't like unions. You guys know that. Like I understand some unions are good. But from my experience where I'm from, the unions that I grew up with in Oakville, which is like one of the wealthiest towns in essentially the world when I grew up there. All the unions there, they would just demand teachers would have adjusted pays of over $100,000. Like elementary school teachers and high school teachers, over $100,000 a year. But they keep demanding more time off. Every 2 years they go on strike, and students lose at least a week because the teachers go on strike. Hey, we need more days off, and we want to get paid more. And it's just, that's the part that I don't like. Where I think unions are good is for, you hear the stories about some car companies and things like that overwork employees, and they make them work 39 hours, and they get underpaid and yelled at and abused, and so like that's what unions are good for protecting employees. But when you have a good job and you just want to get more days off and more money, even though the job's already paying you six figures, then that's what I don't agree with here. Now, Amazon, all these employees here, I'm kind of in between on them here because they're essentially making minimum wage, in the Canadian minimum wage, even though it's in Italy. But it's I'll side with the Amazon people here. I'll side with them. They're probably being a little bit overworked here. They're not getting paid a lot of money. If they want to go on strike, okay. Now, saying that, if I were to build a company, as I said before, and my workers were to unionize, my employees were to unionize, I would do what a billionaire did. What was his name? A billionaire bought a newspaper company, and then the workers filed for a union to become a union, and then as soon as he found out about it, he's like, you know what, I'm just going to shut down the company. It's not worth it, because I'm only making, he's a billionaire, he's only making $1 million, and it's not worth the headaches that come with unions going on strikes. So seriously, that's what I would do. If it would depend on the company, but I don't know, it's just a shame, because you try your best as an employer, right? You try your best, and there are those situations, like obviously people like Apple makes iPhones in China because you can't really unionize there. People are like jumping off the buildings into nets because they want to kill themselves for not making enough money and they're overworked. That would be a good place for unions to take charge. It's just, I don't know. It's just I'm in a weird situation there. Let's move on here. Let's move on to Tesla. The company that's known for treating workers perfectly well, right? Excuse me. Tesla completes installation of world's largest lithium-ion battery and beats a 100-day deadline. This is just a cool news, man, because people don't know really a lot about new renewable energy. Like why this Tesla battery is so revolutionary from the past. Like Tesla as a whole from the past 3-4 years, like the Tesla Powerwall, the Tesla cars. What's most impressive about them is the battery. It's not the style and looking cool and all that. It is the battery. It's a mix of everything, but it's the battery itself. It's one thing to have a renewable energy source. So what is this? Where was this? In Australia, southern Australia, the wind farms generate a large amount of electricity to power homes. However, during the nighttime, not during the nighttime. I guess kind of during the nighttime when people aren't using electricity, but the wind farm is still pumping up a ton of electricity, a surplus of electricity, the electricity just gets wasted. And you can't store it because there's no battery. All of a sudden, Tesla builds the world's biggest lithium-ion battery, can store more energy than anything else that's ever been invented. All that surplus energy every single night can get stored up and used, and it goes to power the house the next day, the houses the next day, the community the next day. So this is good. It's good for the environment, cool for business, cool for innovation, cool for science, bad for oil companies. But I'm obviously pro renewable energy. I love it. This is the part of Tesla that I like. The car stuff I'm not too excited about. I'll probably buy a car eventually, Tesla car eventually. We'll see how much I can make in the next couple of years. I need an electric car for delivery. I need to really look at that soon. I'll talk about that at the end of the video. Some updates on that. But Tesla, I mean, the most impressive part is the technology behind all this stuff. It's not like the car itself. It's like the battery. It's the power wall. It's the roof. That's what I'm impressed with. Okay, let's move on here. I just want to talk about 7 ways wealthy, mega successful people think differently. I'll make some more whiteboard videos soon. I'm still kind of recovering from something. I'll get to that at the end. So 7 things is, I'll give you guys my points on this. So they're open to criticism. And that's kind of half true. I mean, most successful people that I know are open to criticism, but still kind of go their own way and are fairly stubborn. They'll listen to criticism and then usually just kind of ignore it. So they love failure. This is super true. Failure. Now no one likes failing, right? I don't want to say that, but wealthy people use failure as motivation. That's what I do. That's what every other wealthy person, if you use failure, then you get, if you fail at something, then you get down, or if something bad happened to you, then you get down on yourself, and then you go through a bad path. That's what most people do. And in my Wealth Accelerator program, it links in the description down below. I talk about this. I talk about how, if you have something bad happen to you, use that as motivation. That's what separates successful people from people that aren't successful. That's one of the big differences. When you get dumped by whoever, a person that you've been dating for years, the options are, there's 2 kinds of people. The one that goes to eating chips and laying down all day and then gets depressed and starts drinking and goes down a dark road. And then there's the other person that starts working out and starts getting a 6-pack. And, I got to get back on the market. And let's try to make some more money. Let's start a business now. So anyways, I'll move on to number 3 here. They grow with like-minded people. Kind of. I mean, that's a lot. You'd be surprised at the amount of entrepreneurs that are actually very introverted and don't want to talk to anyone. They'll kind of build up a little bit of a network on the way up while they're building something. But for the most part, especially a lot of the tech guys, I'm starting to realize this. A lot of the tech big billionaire guys out there, they have a couple people close to them, and that's really it. They don't really go out there and network like everyone else tells you to. It's strange how that works. They'd rather focus their time on making good product rather than going out there and networking with people. Okay, number 4, they remove emotions from the equation. This is true. It's kind of like, it's a little bit of I talk about how wealthy people are like psychopaths. So there's a disproportionate amount of billionaires that are either have psychopath or sociopathic traits. Now, it doesn't mean that they're psychopath, it doesn't mean that they're sociopath, but they've a lot more traits of those kinds of people than the average person does. And one of those is the inability to kind of feel emotions. You kind of get used to ups and downs, and when bad things happen, you just kind of move forward. You don't really feel that stuff. And so I don't even know if it's removing emotions from the equation. I think it's more of just a lot of really big people don't feel as much as, that's just my opinion. Maybe I'm wrong. I mean, Elon Musk was talking about recently how after he got dumped by Amber Heard a few months ago, he got super depressed and he needs to be in love in order to be happy. And so he I mean, people don't want to hear this, but Elon Musk sounded very suicidal after he got dumped a few months ago. He wrote this, how depressed he got. And I was like, oh man, he's not sounding good. And, man, if that guy were to go away, who knows? That's scary. That's scary to think about. Okay. Number 5, they delay gratification. And, this is actually something I tweeted out today about how long are you willing to wait for money? And, I said, you can get 100K today. Would you rather do that? Would you rather wait 1 year, get 250K, wait 5 years, get 5 mil, or wait 20 years and get 50 mil? And most people said they would rather wait 5 years and get $5 million. A lot of people said wait 20 years and get 50 million. And pretty much no one's I was surprised. Only 2 or 3 people said that they would take the $100,000 today, and no one said that they'd wait a year for 250K. So I was a little bit surprised, but I guess a lot of you are patient, and that's good. A lot of you are patient young people. So, that's good to hear, because you hear so much about young people these days, living for the now and go on vacation now and do all that stuff now. And it's good to know that at least the people that listen and follow and interact with this channel and myself are, give good answers to stuff like that and are more patient and know that life's a marathon, not a sprint. Okay. Number 6, they're fully committed. This is true. I don't even want to talk about, like, of course, you got to be fully committed if you want to be successful at anything, right? And number 7, they set expectations high. This is super true. I mean, I want to be a billionaire one day. That's kind of there's only 500 of those in the United States. There's only a few thousand in the world, I think. 2,000 in the world. And, yeah, like I want to be one. That's my expectation. And, shoot for this. It's that old saying, if you shoot for the stars, shoot for the stars. So if you fall, you land on a cloud. That's Kanye, right? That's, and I'll be quoting Kanye. I like, that's seriously, I really like that quote. Shoot for the stars. So if you fall, you land on a cloud. And, I mean, that's how I think about it. I want to be a billionaire. And guess what? If I end up only being a millionaire, that's fine. And based on my income this year, I should be a millionaire. I should be a millionaire. Worst case scenario in the next 15 years. So that's something really cool that I was thinking about recently. I was looking over my financials today over the past year, and things are going well. And then I'll release my tax returns to you guys in 5 months when I release those. I'll tell you guys how much money I made and if I hit my goals and stuff. So, anyways, we're going to move on here. Apple gained nearly $285 billion in market cap this year, but some see trouble ahead. I just wanted to mention this because, I mean, they're probably going to be $1 billion company. Let's look at this here. Like, last year, this time in January, their stock price was $121 a pop, and now it's worth $174. It's a big chunk of change. Now let's even go back 5 years. I mean, I tell the story. Like, I remember when I bought the Apple stock for like $80. It was like somewhere around $80. It was in 2014, and then it shot up to like 129 or 130. Where was that? Where was that? It was somewhere up here, 2015. It's about a year, right? And like, I mean, Apple's just they're on a tear right now. And Apple's, here's the scariest thing. Here's the scariest thing about Apple is that they are going to become a $1 trillion company, and their price to earnings ratio, their PE ratio, is not crazy. It's actually really reasonable and good. That's how profitable Apple is. The PE ratio for Apple is 19, which, like, if you're under 20, that's pretty good value if you're a big company. So if you're to buy Apple right now, it's still pretty good value. How crazy is that to say? In terms of how they're performing as a company, I mean, a PE of 19 for a tech company is pretty good. It's really, really good. It's kind of making me nervous that they're, I don't want to throw this word out again, but monopoly. They have a lot of competitors, but here's the thing with Apple is that it's not that they own one market 100%. It's that they own a large portion of a lot of markets. They don't own like all of one. They own a large portion of a lot. So they're in the phone game, they're in the software game, they're in the computer game, they're in the whatever marketplace game. Sure that laptops and computer, like they're in a lot of stuff, and they don't own one market, but they take up a large portion of a lot of markets. So, man, Apple's just kind of crazy. Now, meanwhile, a PE ratio like Amazon, Amazon's worth about 60% as a company. They're worth about 60% as much as Apple. So Amazon's market cap's $557 billion. Their PE ratio is 291. 291. Their price to earnings ratio. So Apple's is 19. Amazon's is 291. That just some perspective for you guys out there. Is that how much earnings Amazon has versus Apple. Man, it's crazy, Apple's PE ratio. Last thing I want to talk about before I move on to personal stuff is Salesforce. So Salesforce is just rolling here. They're way up this year. I don't even have a lot of time. Let's just move on to my personal stuff here. But Salesforce is doing really well. They hitting all-time records every single quarter. So last thing I want to talk about is just myself personally. So I want to talk about kind of my situation while I was away and all that. So actually the first thing is that I have been keeping an eye out for places, for offices, for other places so I can set up an office somewhere around here. And there's one that's kind of caught my eye, and I may be talking very soon with them about that. However, it wouldn't open for a while. I wouldn't be able to move in for months. But it is something to think about, but it's the perfect fit, perfect location. perfect price. Obviously I'd like it to be lower, but it's everything. So hopefully I can look at that and talk to the person tomorrow or in the next few days or next week or whatever. Second thing is that, so while I was away, I was sick. I got really sick. I've had a lot of health problems in the month leading up to me taking the last week off. And as you guys know, 2.5-3 years ago, I got really sick to the point where I needed a transplant and then I, really, I don't believe in God, but it was like right when I was at my lowest point, all of a sudden test results came back and I was starting to get better. But I was experiencing something very similar like a couple of weeks ago, and I was in a lot of pain, back pain, and then I started getting some. I won't talk about some of the other stuff, but I was getting some back pain and some other symptoms, and that was very similar to what I went through 3 years ago. And so I was just like, okay, I need to stop and just take care of this. So I saw a bunch of doctors, some specialists, and hospitals, and all that. And I got cleared of everything. It was just I was kind of taking some medication for my back, and then it was kind of messing everything up, and then it was making everything bad. And then I stopped the medication, then everything cleared up. And it just really, when I go through that stuff, when I get sick and I gets to the point where I'm in pain 24/7, it really makes me appreciate life again and being healthy again. And so I needed, I did all that stuff, and then I've still taken essentially a week or 5 days off since then, a few days off since then, and I'm kind of getting back to work now. But that's why I was away. It was just some scary stuff. It was reminding me of what I was going through a few years ago, so I needed to go to the doctor and get that all taken care of. So, but as of right now, I mean, this is actually one of the funny things is that I got a bunch of blood work done, and so 3 years ago they told me, like, look, when they told me I was recovering from my kidney failure, they're like, look, your kidney function may not ever return to normal, probably not going to return to normal. It's probably going to be stuck somewhere at around 80%, 75 to 80% for the rest of your life. And that's okay. Your kidneys went through some damage. And then as of a week ago, they're at 100. So that was really, it actually made me really happy to see that stuff. So that's kind of the update on everything. I'm going to just kind of take it easy the next week or so and kind of ease myself back into work. And I started coding a little bit today, kind of getting back into the swing of things. So anyways, that's that update. I'd like to, thank you very much for watching. You're all very beautiful people. I'll see you guys in the next video.